Hello and welcome to the week ahead video. A quick look ahead to the next 4 days of trade, as of course Friday sees a multitude of global exchange closures due to Good Friday and the Easter celebrations. As such, we see a truncated week, but this is likely to still pick up a lot of attention as we progress through the earnings season. So after mixed reports out of Wells Fargo and JP Morgan on Friday, we have some further financial titans to report this week. Citigroup on Monday, followed by Bank of America, Morgan Stanley and Goldman Sachs later in the week. Particular focus is likely to be paid towards fixed income trading, particularly the likes of Goldman Sachs, who derive a significant amount of their revenues from such operations. This is seen likely to favour the likes of Morgan Stanley, whose unit in terms of fixed income is slightly smaller in comparison to that of Goldman Sachs. As such, that will likely pick up a lot of attention as we progress through the next 4 days. But in terms of weekend fundamental news flow, we have seen some further flaring of tensions in Ukraine. As the eastern region comes under threat from pro-Russian militants, we have seen an exchange of gunfire between Kiev loyal specialist forces and pro-Russian militants, with Russia continuing to deny any involvement or any knowledge of any of the operations of these pro-Russian protesters. As such, we could look out for any further comments in regards to potential sanctions against Russia. Again, this is now back on the table as we've gone through 2 waves of sanctions against individuals, with analysts at Goldman Sachs seeing metals sanctions as still a possibility as we head through the week. And we have seen Ukraine, of course, being cut off from gas supplies from Russia itself after Ukraine failed to pay its gas bills to Gazprom. Elsewhere, though, on the macroeconomic side of things, we have seen some euro weakness from the off as we gapped lower in euro dollar to the tune of 30 or 40 pips, as a number of ECB speakers over the weekend continued to highlight that tools remain on the table to combat deflationary pressure. But in terms of actual specifics, there's relatively little in the way of new news flow there out of the ECB, but most permanently, Draghi did highlight the dangers of having a high exchange rate. Elsewhere, though, in terms of data, quite a few UK releases worth noting. We have the latest CPI and jobless numbers out of the UK to digest in regards to Bank of England monetary policy. But other than that, as mentioned, it's to be a truncated week, with the following week also being slightly smaller as European and UK markets are closed on Monday. But as always, we'll see you again on Thursday for the weekly wrap video. But in the meantime, have a fantastic 4 days of trade.